Ladies and gentlemen of the crypto space, we're live on a Monday, February 7th at 11:30 a.m. It's the start of the week. Got some good data. We have some narrative updates, and we definitely have our ear to the pavement with regard to what the hell's playing out on the markets this morning. Chart data tells the story. It's everything. You don't hear news media. You don't hear people telling you the story. The data tells you the story. And I guess I put it into words, so in many regards, I'm news media, damn it. I don't want to be news media. I want to tell you guys how I'm looking at the data and the story it tells. And all right, fine. Maybe what I do is news media, but it's my interpretation, and it's pretty stark. It's pretty obvious. So there's a way to look at markets in two separate perspectives. Bearishness could actually be bullish, and that's what we're seeing in a lot of chart data. Let's go over to the main screen and we'll take a look at some of our favorite assets. Folks know my positioning, but I see obviously a decent fractal here with regard to curve. A breach below the 200 SMA in the daily, a breach back above, and let's see if we find resistance at the 100 SMA, 50 SMA. I mean, technically there's a bearish cross right there, 50 SMA, 100 SMA, and unless we really rip to about $4.20 in the next day or two, we're going to have a bearish cross there, which is extremely reminiscent of what occurred back on June of last year. I mean, it's just literally like spot on in so many regards in the context of a fractal. If we find resistance there, this looks like either there's two dips that happened last year, but maybe we'll have one, or maybe it just breaches right through, and the amount of capital that's flowing around the system just says, all right, we're done with legacy finance, and we're going to be plowing capital onto these crypto enterprises. That's another important narrative that folks don't talk about often. These are not damn crypto protocols. This isn't crypto 2017. These are enterprises that have cash flow, they have capex, and you can model them entirely as a business. Now, I was talking about this last year in 2021, but it really hits home as my thoughts have clarified heading into 2022. It's not assets. These are cash flow enterprises. And sure, you can model it and you could own them and model your own portfolio as owning cash flow assets, owning parts of businesses, which is exactly how Warren Buffett talks. And that's the deal. That's the bottom line. You own a part of a business and it pays you part of its cash flow. Disintermediated access to revenue streams, that's one of the 2022 narrative updates rather than just proliferation of current monetary policy. It's more so the proliferation of VE, voter escrow tokenomics, where you have disintermediated access to the cash flow positive enterprise's revenue stream. You own a piece of the business's revenue stream. So this is quite interesting. You know, I always get tempted to have a position. You guys know my historic the deployment of capital to the curve asset, and you know the story. I've told you guys about the sequence of ownership where Convex owns Curve and who controls Convex, and the whole Curve Wars narrative. And I don't necessarily feel inclined to further backtrack. You know, I feel like I have exposure to Curve, and I don't need to own Curve to have exposure to it. Have exposure to it vis-a-vis Convex. I have exposure to it vis-a-vis Frax, who still has the dominant DAO ownership of Convex. Obviously not dominant ownership with regard to circulating supply, but dominant ownership relative to what it is as an entity, which is a DAO in many regards. Obviously, Frax has a narrative unto itself because of its stablecoin, because of its pivots with the FPI, and really what I see as where it's pivoting to, which is as a treasury. They deploy their treasury, they generate revenue streams, and they use that to basically power their stablecoin and their new FPI asset that is quite tantalizing from a conceptual standpoint. So I have quite the extent of exposure to Curve, so which still lets me feel like if I had a curve position, I would be overexposed to it. So obviously, the amount of VE curve in circulation has just breached the amount of curve in circulation. That's all fascinating. We all knew that was inevitable. And these are all great metrics. And there's no way to discount that curve is in excellent position and everything. It's a great position, but my narratives still stand where you have the sequence of ownership and you potentially have the redundant exposure to the curve wars narrative, and these are tough choices. And I obviously tell you that I don't own curve, and I express to you these narratives, and it's all things to consider as you craft your portfolio. I always remind everyone there's no reason to not consider a curve position because that ultimately is my choice. Hold on one second. I'm having a YouTube. Oh, that's great. Ah, lovely. YouTube issue. Typical. Sorry, guys. Fixing YouTube. YouTube's back in business. A couple of folks on the stream. We got Dan, Umberto, lives in the house. Killis, good morning. Roberto, hola. ¿Eres toda? Okay. Te creo. Here hoping to fake out 46 and crash to 16. Yeah, maybe. So that's really, I think, a good way to think about these markets. Um, this is why it's critical to have a well structured portfolio during extreme bullishness to carve out portions of the portfolio for optionality such that you can purchase when discounts emerge. And I have not done the best I could have done historically. I've done well this time. And there's no way to rule out that further discounts won't emerge, but in fact, I think that leads to the conclusion that you should always have optionality. And the whole question is not if, but how much. Ryan, hey Noah, how was your weekend? Pretty good. It's nice to take a couple of days off and spend them with family. Multi will make you the biggest incomer 2022. I think so as well. It's already at 2548. That's an extraordinary number. I would like to see it get above these previous peaks at 27. I wouldn't say this is a head and shoulders type positioning, especially with the support that we saw here in this price action congestion region, um, higher than price action between December and end of January. But we'll see. Overall, my sentiment regarding the asset has significant confirmation. Obviously, my 2022 narrative, the primary target I'm looking at is seamless cross-chain interop or interop as a service. So there's a lot of interop going on, boys and girls. I mean, even Aave's talking about interop. And I was looking at this protocol most recently called Rubik, which is quite interesting from a presentation standpoint, has a great user interface, but tokenomics are far from ready. And based on what I see, you can't buy it. It's not something I would even remotely consider at this point. Um, Damn, 26, 24. There's a nice little breakout. Real time buck and a quarter rip with 120, 220 plus $1,000 buys of multi of any, but same thing. You get my point there. So, with regard to seamless cross chain interop, there's nothing that's remotely in the same scale and scope as what any and multi are working on, because multi facilitates seamless cross-chain interop, but we know with basically absolute certainty at this point it's deeply integrated into Solidly. And the point of Solidly, or the unspoken power of Solidly, is seamless cross-chain swaps across chain decks. And Andre has spoken specifically to the point that he hopes for Solidly to be consumed by the other protocols, consumed by literally like Spooky and Spirit and that's Phantom ecosystem, but cross-chain as well. And literally, obviously, the aggregators are going to consume it as a source of liquidity for their aggregated transaction swap offerings. But the point is, seamless cross-chain interop as a service, seamless cross-chain DEX as a service, and that is there's just a maximum level of confidence that that's what we're going to see out of Solidly when it releases. So what have I always said is that DAO bullshit over the NFTs was a massive red herring. It's this the general public flocking after big numbers and just absolute shallow reasons to allocate capital. Whereas the NFT is meaningful, it's just merely a component of Solidly and getting initial liquidity out there for its assets, its incentive system, rock or whatever it's going to be called. It's the bootstrapping component, and it's literally just a tiny piece of the puzzle. It's only a part of the puzzle, and it was the biggest damn red herring I could possibly think of. Um, so even Solidly, we'll see how that plays out. I'm quite interested for the Solidly release and how its asset plays out with regard to a position consideration. Um, I have my optionality in place. I've recently taken an additional position on Phantom in Key DAO, um, my finance, obviously. Um, Mashinsky from Celsius put up a proposal to take some of his Celsius X wrapped assets to be used as collateral to mint Key, or to mint Maya for that matter. And I found that quite interesting. It's a relatively low market cap asset, around 50 mil the last time I checked, but now it's up to a buck 12.8. Um, and all of that is quite interesting. That really establishes some of the confluence I need and provides confidence that I need to take a position, and I felt it was appropriate. They have a nice staking tokenomic, 4-year locks or tiered locks for that matter, 1, 2, 3, 4 years. And you guys knowing me, I'm the 4-year lock whore, so I got a 4-year lock going on with a decent sized position. Um, Quite profitable. It produces a nice revenue stream, and it's sustainable in many regards. Was it 30%? There's no fees, so this is obviously right down the road of abracadabra with regard to functionality or CDP functionality as a stablecoin. But if we go over to Polygon, you see 30% of the repayment fees for all collateral types plus a 25% weekly boost. So that this is all about taking out loans and loan repayments, and the loan is obviously denominated in their stable coin, and that's quite palatable to what I have interest in. So I have a nice key position that's cranking out 111%. I have my liquidity currently in their yield protocol, which generates 20%. Let's see if it loads. Well, come on, Mike. You could do better. 20%. There you go. All right, if that loads. So that's the deal. So I'm currently with a relatively large optionality position, stablecoins, generating about 20% ROI from providing liquidity to their incentivized curve pool. And that's only a transitory position. I get tempted to increase the key position, but I think the optionality is better and patience is better. And I'm very eager for Solidly to launch and VE Multi Tokenomics to launch. And this is all heading in a very interesting direction. VE Tokenomics really has taken the crypto space by storm. The notion of this intermediated access to cash flow positive crypto enterprise, and it's going everywhere, and it's quite exciting. And frankly, the exponential uptick in cross-chain references is very exciting. I did want to talk about macro. I don't necessarily want to backtrack. You guys obviously I want to focus on crypto. Let me answer some questions first, but I'll keep the bond chart up. Um, February seems like a bit of a relief month, but after that, I'm not so sure. Yeah, and Liv, this goes into really the macro situation. I really see this as a bear market rally, and Curve very much expresses where I think we are. There's a lot of pressure being placed on the macroeconomic system, and it's not a bull market. You're not above all the moving averages. You're not printing higher highs. So I think this is a great asset to look at to get a sense of where we are. So I think we had a couple months going forward into horizontal or crab type market conditions. I think we hit the 100 SMA, the 50 SMA as resistance. We fall down. We do something similar as presented by this fractal. We could take a look at the bond chart for what I see. We're at very high yields on 10 years. And if you go out to the yearly chart, what I found very interesting is that historically, uh, there's been very few times in the last 50 years of history that we breached the 10 SMA to the upside. So this green line right here, 2.124%, is where we are with regard to the 10 SMA trend line. So we're really just right there. So bonds are selling. Um, there's more selling than there is buying, which is why the yields are going up. So the problem is that bond yields go up. You get into a complexity with regard to tax receipts, providing enough income to the government corporation to be able to service entitlement and debt obligations. So if yields go too high, they have to pay out a huge amount of capital, which is going to dip into their tax receipts, and they have to pay these yields, and they're going up. And they have to pay Social Security, they have to pay the military, they have to pay Medicare and Medicaid. So all that stuff is a complexity with regard to CPI potentially rolling over, in which case GDP would take a fat hit. And that's why the next CPI print, or the next couple of CPI prints, are going to be quite interesting. If Powell is right and it turns out to be transitory consumer price inflation, um, with these rising rates on bonds, it's going to be in a tough situation with regard to tax receipts. They need the large CPI to juice the tax receipts. They need a juice CPI or keep an elevated CPI to juice GDP so they can have increased income and they're and they haven't talked about yield curve control, which is in many regards just a fancy QE or QT operation where they control the bond market. They need to push bond yields down. They need to increase their income so they could service the bond yields, their entitlement and overall debt obligations, and they really need to boost the top line, which is GDP. And if CPI rolls over, that's not heading in the right direction with regard to boosting GDP. You're not going to boost GDP with manufacturing in the United States unless you want to figure out how to repatriate 20 years worth of exported supply chain. That's not going to happen overnight, but this stuff is happening real quick. This stuff is happening right now. So how do you increase GDP? There's no manufacturing base. It's a gutted manufacturing base. So the only way to boost GDP significantly in the United States or for the United States economy is further financialization, which is basically it has writing all over the wall. I literally just buy the bonds, juice the balance sheet, and there's already an established correlation between the balance sheet and equity markets. Run up the equity markets. The equity markets are going to generate the tax receipts that the government needs to juice the GDP so the government can actually keep the whole system going and pay off its entitlement and debt obligations. So that's the directionality of it, and really how I started the stream, where bearishness is bullish. They're selling bonds. It's bearish on bonds, but that bearishness is going to force policy to be accommodative of directionality. If bonds aren't being bought, government's going to have to buy the bonds. And clearly we've seen they're willing to do that. That's what they've done for the last 12 years. Dr. T's in the house. Always a pleasure. Top of the morning to you. Lower high watch, but who knows? Yeah. I don't know about lower highs. It depends on the charts. I have a very concentrated top end of the portfolio, so I don't see lower highs for the assets I'm looking at. Listen, I think this is key. Let's take a look real quick. Yeah, it looks pretty good, up 12.94%. So this is heading in a nice direction. This is a fat inverse head and shoulders um, with a breakout. It looks like it has a breakout and a retest of support as like not the neckline, but that's nice. That's a very interesting positioning. I mean, the Mashinsky, which is Celsius, that's a big deal. You know, they have all those assets, all that stagnant equity of stuff like XRP, Cardano, Doge, Shiba, whatever the heck they're accepting on the platform, and it does nothing. It's just useless. It's just stagnant. So they wrap it, they throw it on Celsius X. They have wrap versions of the assets, and Celsius X facilitates the liquidity for the, you need a liquidity engine for key DAOs so that they could liquidate automatically if collateralization thresholds are breached. So they need it for their system. So it looks like the puzzle pieces are in place for Mashinsky to significantly or access significant quantities of equity in historic stagnant equity. And that could speculatively be via the KeyDAO platform, so that's why it has become on my radar. Let's take a look at this. This is Frax. Frax has been doing well today. Clearly, we had significant irrational exuberance. When the chart loads, you'll see it. I mean, this is all pure irrational exuberance right here. But what do you have? You have higher lows, and that's a nice trend line. There's no way else to see that. That's a nice trend line. It's nice to see it above that green line too. This green line here, the bottom green line, is a historic resistance. It lines up nicely with the blue higher low trend line. You know, it's a little off. You push below, but basically it's a series of higher lows. And as long as it holds above this green line, I'm quite intrigued. As long as you're pushing directionally upward within this purple box of price action congestion. And if we push above the guppies, because the guppies are nicely compressed, short-term moving averages, that would be a nice thing to see. And clearly the top green line is a historic resistance. If you start to break above it and you fall back down for a resistance flip support, that's further confluence suggesting the directionality of price action that we want to see. That's the bottom line there. So you guys know my sentiment regarding Frax, and just multi looks great. Um, vis-a-vis the any chart. This just looks like a great chart. Everything on this chart is higher lows after higher lows, higher low, higher low, higher low, higher low. Even the damn bear flag broke to the upside, broke above a previous resistance, retested, flipped support, and broke out for a higher high. I mean, literally, I've told you guys about the trifecta of bullishness. I mean, is this not the most perfect trifecta of bullishness? A previous resistance, flip support, retest, confirmation, higher high. I mean, I mean, you can't make this shit up. Uh, that's just extremely interesting to see. That's the perfect. It's perfect, as I've always described the trifecta of bullishness. 71 people in the stream, 21 likes. We can do better. Thank you. Last thing, Curve is great, but it looks like Uniswap will eat its lunch. No tokenomics, but better product. Can't hold Curve for this reason. I think Tetranode agrees. We'll see how that plays out. Sup, Posh Captain, what do you think is going on with CVX? Had a mini sell-off this weekend, and it still has quite a bounce back with the rest of the market. Yeah, it's going to have a variety of volatility or plethora of volatility. It's going to be volatile. All this stuff in the crypto space is volatile. Generally speaking, I like the way the CVX chart looks. Bounced off the 200 EMA, 200 SMA below. Didn't really hit any of it. Didn't push down to the 200 SMA in the daily. This green line will be nice to see a breach above and resistance to flip to support. Right now is hovering around it, so somewhat of a flag, somewhat of just the price action congestion zone, still within the fork, or at least still with above the bottom bar of the fork. That's nice to see. Generally, this is a heck of a congestion zone region. Let's pull out our rectangle, and you could probably draw something like this. I mean, yeah, that's interesting. I mean, look at all that congestion, all that congested price action. So a breach above this zone will be nice. Bear in mind, the guppies aren't too far ahead. You just got to break above to about 32.45, and there you get into some geometry and a breach above the first bar of the fork and push towards the 50 SMA on the daily. That'll be nice to see. Breach the 50 SMA on the daily, fall through, bounce off the first line of the fork, and that'll be nice also. You don't have to hold support above the moving averages to still have price action that establishes decent directionality. Joe, have you looked at the 2 ohm ecosystem on Phantom? It's convoluted meme that's printing a buttload of money. I'm not interested in printing too much, nor memes, nor any of that reflexivity. Just not interested at all. Geld's in the house. Always a pleasure. Can you please talk a bit about Key DAO? Pretty sure I just hit on that, my man. Hope that helps. Gilead, good morning. Andrew, afternoon captain, and Rational Squad, the most rational squad in the entire crypto space. Yes. Sup, CVX team mentioned on Discord that they are working on a modern UI, Uniswap style, to let people do swapping with Curve V2 pools. You think they will eat up some market share from Uni and Sushi? We shall see. You guys know my positions. I have a CVX position. That's the deal. Uh, Love Face XYZ. Enough watch stream girls here. Yes. Is that good? It's bullish. Yeah, you're welcome. Dylan, yo, now a question. You got any thoughts on EOK? I do Sin multi-space. Seen some sharp DeFi folks talk about it. Well, synthetics are a big deal. Structured financial products are a big deal. Derivatives, options, and so on and so forth. I've recently acquired a couple new follows, or I'm following some new accounts that are diving into that, like structured financial products dealing with tokenization of equities strategies. And I find it quite interesting. The option protocols are a big deal. GMX, Premia, was it Dopex that Tetranode deals with. This stuff is big. That's big business, and that's not Incumer necessarily. You get revenue streams, but that's old school financial players that are like, oh, we could do the same shit with this ridiculously volatile market, and they're eating it for lunch. They absolutely love it. So that's good to see. I like it. I'm not exposed to it just merely because I respect my portfolio size and I don't have the capital to deploy to that narrative. That's an entire narrative unto itself. So that's why my 2022 narratives list is as focused as it is. It's focused on the things that I could actually afford to target. Um, no, it's the best news media and BS filter. My man, Harjeet. I appreciate that. Vasco. Hey, Noah, what happened when 1% changed to 10%? What do you do after that? Uh, you reevaluate. You assess directionality. Maybe you assess if there's irrational exuberance. If there's irrational exuberance, you trim the shit out of the position. If there's not irrational exuberance, and if it has been crab walking and just appreciating over time, then it's great. You turn 10% into 100%. Well, not 100% of the portfolio, but 10% goes another 10x, and that'd be nice to see. So you have to assess where the market is when the asset has reached a particular level of appreciation. Um, I wouldn't necessarily. So bear in mind that one of the most important things to consider is you want to cut losers by winners. So 1% to 10% is obviously a winner. So that's something to dis- uh, discourage liquidating the position. But if it was a rational exuberance that made it a winner, it doesn't mean the price action or the price point is stable. So that's why you would trim such a position. So these are very interesting considerations. There's no very specific rule book on what to do, but those are certainly things to consider. Joe, key Dow is on my radar, but can't buy everything we want. Always remember that, everybody. I talk narratives. I talk about how I look at the markets. I even talk about assets that exactly what Joe said. I don't have it, but it's one of the key narratives heading into 2022, options and structured products. But I can't have everything I want. And Joe, you were spot on. And the better you could control that impulse to want to own something just because it's the next shiny thing or it's awesome and it's going to change the world, the better portfolio you're going to have. It's going to be able to be more concentrated and more focused on the strongest of narratives that you see. And most importantly, it respects the portfolio. Chloe, hey, Noah, and everyone. Always a pleasure. Larry, thinking of moving my CVX CRV to CVX. What are gas fees like on the bridge system with Convex? Would be more efficient to keep CVX CRV and accumulate if left at less than six figures. There's no way to answer that, my friend. It's so subjective. We will only know in hindsight which performs better, CVX CRV or CVX. They have the they both hit the same narrative, the whole curve, food chain, but they all have narratives unto itself because Convex is expanding into CVX FXS, and they're likely to expand into other protocols as well. But curve is curve, and curve just prints. So it's not an easy choice. There's no what's the best thing to do. And gas cost is certainly one of them, depending on portfolio size. Hope that helps. Liv W, do you know you can create a vault on my using your YV die? Has all the overtones of Abra, but it has the Mashinsky narrative at play right about now. So that's a big deal, in my opinion. Bear in mind, I'm inclined to keep my Abra position unchanged. It has not been adjusted since the last time we talked about it. Still currently sitting at 5.9% of the portfolio. AnySwap has just been ripping up, so it's adjusting all the other portfolio assets down in percentage, but still sits at 5.9% of the portfolio. I think I'll possibly trim it a little bit, but I want to retain some for obvious reasons. MIM is deeply integrated into a variety of protocols at this point. So there's very big infrastructure entrenchment in that regard. So 5.9%, maybe under conditions, I'll trim to like 5%, 4.5%, but that's about it. I intend to most likely retain a position unless market conditions warrant significant adjustment. DJ Slith. The recent bear market was the first time I've seen my net worth decrease by six figures. Much easier to handle when it isn't your first bear market experience, hoping price doesn't increase too fast. Yeah, bear in mind this is still a bearish market. Bearish overtones versus bullish overtones. Bullish is, you print at higher highs. And then it falls to previous resistance and it flips support. And then you got a new higher high. That's a bullish market. There's bearish overtones in these markets. But you get bear market rallies. So you got great rallies going on across the board. Clearly, multi is ripping now at 25.51. That's crazy. This is a heck of a chart. But I could appreciate your sentiment regarding a first bear market experience. We had a hell of a run. It was May 2020 to September 2020. And September to January was a bearish market. Then January just ripped 2021 for a good part of the entire year. And then obviously we find ourselves where we could show it on the curve chart. So it's May 2021. And it was bearish probably until August, September. And then September ripped until the end of the year. And now we're in a bearish territory. So maybe February, March, April, maybe May, April. We'll start to see bullishness resume depending on macro financial conditions. I mean, this thing's just going up. Let's see how the dollar. I haven't looked at the dollar in a bit. Let's see what the dollar is doing. Pushing down. It's further lower than it was earlier. This is obviously the monthly chart. That's a bearish engulfing on the monthly. 21 days left on the monthly, so that's still a ways out. But that's a big bearish engulfing, finding support on the 200 SMA on the weekly. We'll see. It means it's horizontal. It's finding support. It's not necessarily a bullish breakout or a bearish breakdown. I'm curious to see if we get to the 50 SMA with a bullish cross of the 200 SMA for a golden cross on the weekly. And that would be suggestive of continued appreciative directionality of the DXY and push through historic resistance. I mean, if the dollar keeps strengthening, that's a big problem for foreign sovereigns, non-U.S. Fiat currencies. That's just wrinkles and bike and wrenches all over the place. Wrenches going into front tires of bicycles. It's really bad. I mean, there's some macro stuff going on that's like, it's on the line. It's really on the line. Don, interesting. They won't have enough cash to make their credit card payment. Pretty much. That's basically the deal. You get it. You get it. Also, what's good with the spam bot? Does that mean you made it? Yeah, I think so. Yay! I made it. Raul, hello. Damn, look at that spam bot. I'm going to have to get a YouTube spam thing. Can I block this shit? I have no idea how to do any of that stuff. I've never done it. I've been in Key now for a few months now. Pretty cool. So, you know me. I don't take portfolio restructuring lightly, and I'm never late, never early, but I look for confluence and significant reason to take action. And the uh, Mashinsky post and the governance proposal is a very meaningful reason to take action. Killis. Tom, my man, how are you, Tom? Hope everything's okay. Prophetic poet of someone wanted to get into stablecoins. Can you give a brief breakdown of basic actions and principles? Well, dollars in a bank account suck. The bank fucks you. Sorry for the prolific language, but it's that bad. Stable coins, you have an increased risk profile as compared to an FDIC insured bank account, but stable coins offset that risk profile by actually paying you real rates of return. That's the trade-off, and the real rates of return. Most people I know operate in the crypto space nowadays with almost all their capital, including myself. Almost 90% of all my capital is deployed to the crypto space, with a bank account merely for liquidity to service, overhead, monthly overhead, and debt obligations. That's about it. Um, I feel comfortable, and that is the most important thing. At the end of the day, if you're not comfortable with your positions, you won't be able to sit in your positions. You won't be able to start creating rational time horizons. You'll have anxiety and frustration and fears. You have to deploy a portfolio in a comfortable environment. It's counterproductive to deploy anything if you have anxiety or fear over the position. So that's the most important thing to start getting accustomed to. And the way you do that is with anything, you edge into it. Deploy some staples, and you got to let it sit. You got to find comfort and really digest what these markets are and what they mean, and that's really what I talk about on Twitter and what I like to talk about on YouTube. Is there any timeline for multi-deploying rewards to holders sooner than later? Questions. Any thoughts on U.S. two-year bond deals potentially casting up to U.S. 10-year? Well, now you're talking about a flat yield curve. So the curve, the yield curve flatness, that's the rate cycle. That's the historic rate cycle. With a flat yield curve, what the heck is the Fed going to tighten into? They've literally, the rate cycle has ended before it even started. So Harvey, you're hitting the nail on the head. You can't raise rates into a flat yield curve unless maybe they start to implement yield curve control or they're buying the bonds and they start to control the curve. And then we're into an MMT world. But Harvey, you see what I'm saying. Rate cycle's done before it even started. Yields on the bonds are getting to a point where it's bringing into question the capacity for tax receipts to service them. So that's where um, yield curve control or QE would come into the picture, where the Fed pads its balance sheet, buys the bonds, drops the yield to a serviceable interest rate. And bear in mind, that'd be a backtrack on their taper talk already. So tapering ended before it even finished. And the flatness of the curve means they got to walk back their rate hike cycle, which means rate hikes finished before they even started. The bond market speaks policy. Fed doesn't create policy. Fed responds to the market to create accommodative policy based on what the market says. So the market creates policy. And the market right now is calling bullshit on QE tightening and rate hikes. That's what the bond market is doing. The market sets policy. Mix, always a pleasure. Crypto Bentley, good morning. Lived up you touched on it a bit. before, but what do you think about stablecoin payouts on Joe, reducing Joe emissions significantly? You know, there's plenty of protocols, and Joe's a beast. The odds are Joe's going to be around for years and years and years, and it's just going to grow as trillions of dollars flood into the crypto space. Dan Tapiero talks about 3 trillion turning into 30 trillion. In that case, it doesn't matter what the hell you own. It's all going to go up in value. So you can't own everything you want to own. You want to concentrate your portfolio, cut the losers, buy the winners. 1% bets, the 10% changes everything. And the larger the portfolio, the larger the concentration you can have in large positions. The smaller the portfolio, you likely want to have large stablecoins with 1% plays and focus on savings and accumulating those stablecoin positions from income, whether it's employment or other revenue streams. So I hope that helps. Those are some high level stuff that I talk about over the last years. Brian, I got that Star Wars shirt on. Yeah. Amir got the urge to FOMO into every project I like is strong. I'm aware of this, but it's still tough. Yes, it is. It's the hardest thing anyone will do. And anyone that watches me knows that's the feeling, the sentiment that I try and encourage people to control the most. Austin, Captain Rationality, spell is a buy at this price point. Feel like the FUD's still in play, holding it down, but I think Danny and Abra system is too promising to back fully bounce. Well, let's take a look at the technicals. I expressed my sentiment a little bit earlier about Abracadabra, and it's a powerful stablecoin. It's a CDB stablecoin. It's very meaningful. So watch the position size because clearly they still have emissions and there's still a lot of FUD going around. And what do we know about the crypto market actors? They're weak and they're fearful and they sell things. And because unless they're getting paid, if something isn't paying you hand over fist, it's going to get sold. So I'm interested to see their tokenomics pivot. That's inevitable at this point, as talked about by Squirrel and Merlin. And these are interesting things, but I had to reduce my exposure to the asset because of the risk profile associated with everything that's going on. And that's okay. You don't need to have a massive position. You can have small positions. And that's why I talk about 1% to 10% changes everything. That's the deal. Ryan, where can I find some info about purchasing red nodes or any other? Well, you can't buy red nodes. Red nodes are denominated in 100,000 rent. So you create a REN VM using the tutorial for a REN VM. You create it on AWS, and then you post 100,000 REN as a bond to turn on the REN VM. Hope that helps. One curious view, worth considering geopolitics could cause a market downturn, right? Yeah, so it's quite fascinating what's going on with Russia and their energy play. They got some deals with the EU, denominated in euros, I think it was. So countries are really fighting to get away from the dollar standard and hegemony. They're just a lot. There's a massive animosity. So the U.S. still has totalitarian control over the global monetary system, and capital controls that the U.S. can deploy is basically weaponization of the dollar, and it's extremely powerful. But that's changing, so it's not going to change overnight. We'll check back in 10 years. But that's why they're doing CBDCs. You could do things with a CBDC to traverse the global dollar denominated monetary system better. You could be more strategic, more advanced. And so that's where the whole world is heading over the next decade. Joe, you don't watch stripper girls that do what you say. My man. Malik, hello from the Sunshine State. Much a pleasure. What a state. Beautiful. Prophetic, poetic. Much appreciated. That was helpful. My man. Lewis, Noah 2024 Oval Office live streams. You know that's what would be. I'd be live streaming from the Oval Office. Hey, United States citizens, we can do better. We're going to do things differently today. We're coming in live from the Oval Office, not on CNN, not on Fox News. Direct to the people, baby. That's what the people deserve. That's what the people's going to get. Tyler, thoughts on CVX FXS? Should be going live after FPI airdrop. I would think just as much. Hex is in the house. Thank you, everyone. Monday, February 7th at 12:14 p.m. Always a pleasure. Tell everyone to subscribe because we can do better and we can help other people do better too. After party on Discord, as always, for the most rational community in the entire crypto space. Y'all have a good one. I'm going to see you again on Wednesday.